Ebrahim, I want to move beyond the FOMC meeting to what the dollar will do to constrain Chairman Powell. All the textbooks, Rogoff and the others, all tell me that it's real simple. Watch the dollar, watch the global FX market. Will the dollar constrain Chairman Powell?
Francine, Tom, it's great to be with you this morning. And we don't think that the dollar is going to be front and center when it comes to Fed policymaking. We think that the historical attitude of the Fed, which is benign neglect towards the US dollar, will continue. That being said, we think that it is going to be a big year for foreign exchange, a big year for the dollar, as the dollar decline that we expect to continue is illustrating that global investors are looking past the pandemic and towards a more benign and inclusive 2021. So we do think that there is a dollar trajectory that is very significant for global asset markets and ultimately rather benign, but we don't think that the Fed will see it as a major constraint, as it pretty much sees everything on track going into the December FOMC meeting.
It may be their exorbitant privilege to stand removed from all this, but other nations cannot. Calibrate where a weak dollar begins to affect other nations, and particularly a strong euro.
Yes, so we are, in fact, we think not very far from that point. So the now more than 10% appreciation of the euro against the dollar is reaching a point where it is beginning to dampen the outlook for both growth and inflation. Of course, it is, again, a result of rather benign developments elsewhere, but it has reached the point where I think we've seen peak negligence from the ECB. So last week's ECB meeting was very telling, because what the ECB told us is that they are comfortable moving away from their level of emergency support. And even though FX featured prominently, it didn't merit for them to address it in a specific policy. And I think that will come to haunt them a little bit, because it will encourage further appreciation. And as I mentioned, we've got to the point where the euro, which we think could well be heading towards 130 over the course of next year, is going to start to weigh on exports as well as inflation prospects in Europe.
But Ebrahim, should the ECB worry about the level of euro or the length at which it gets there, so the trajectory?
I think ultimately both of them will be very relevant factors, but I think over time the level will start to be a concern. But that's, of course, against the backdrop of very fragile inflation expectations and what is still a rather fragile economic recovery. But it is true that, again, it is probably only nearer to 130 that those downside forces on growth and inflation will be the primary concern, as opposed to one of several headwinds on the horizon.
Will inflation be back, Ebrahim, and what does that mean for interest rates?
So we take a rather nuanced view of the outlook for inflation. In general, we think that, if anything, the pandemic is reinforcing some of the structural disinflationary forces that have existed for a number of decades, including the even wider spread of digital technologies. But that being said, we think that the uncertainty about inflation is higher than it has been for many years. So investors look at the outlook for inflation, and they are pricing a significant inflation risk premium, debasement risk premium to some degree as well. So the difference between maybe the fan chart for inflation and the, I think, still very subdued outlook in the central scenario is pretty wide. But we remain with the low-inflation, subdued inflation camp globally.
Ebrahim, what is a pair that's the greatest opportunity? What's a major pair, maybe something obscure? I'll leave it up to you. Where's the true opportunity to make big figure moves?
So I would highlight two opportunities in our view. One is something that you've extensively covered on a daily basis. We do continue to be optimistic on a Brexit agreement in the UK. So in short order, over the next week or two, we think that is the central opportunity. We think that cable would be one good way to express it. I think cable could, in coming weeks, go as high as 140. And that is, of course, very idiosyncratic, but it is also leveraging off that continued dollar decline. More broadly, we think that in this environment of a dollar sell-off, we are looking for currencies that are undervalued and hopefully benefiting from the surge for carry as well. And that would probably be ruble in the EM space. There's a very significant political risk premium that we think is pricing something close to the worst case for the outturn of US policy in the coming years. So ruble in the EM space, sterling in the very short term would be two of our favorite expressions.
Look, Ebrahim, one more thing here. We've got some breaking news we're going to run to here. But Ebrahim, one more important question. On the dollar dynamics, just simply, is it affected by fiscal stimulus at all? I mean, is your world immune to any successful outcome on United States budget stimulus?
Not at all. In fact, fiscal stimulus is a very relevant driver for us right now. But unusually, the calculus in FX currently is more fiscal stimulus means a weaker dollar. And that really has two reasons. One is it does, in general, reinforce the positive attitude by global investors. It enhances risk appetite, and that has been dollar negative. The second is, unlike in the past, more fiscal stimulus doesn't translate necessarily into higher real yields in the US because of a very dovish Federal Reserve. So more fiscal stimulus, if anything, lower real yields in the US, and again, weaker dollar. So we are watching fiscal stimulus very closely, as is everybody.